Stocks up quite nicely on the day. Bonds are down. Gold is up. Has the market turned back over and it will be heading up long term? We can't possibly tell you that. We can tell you that as we look at the charts, we do have a week that's starting off with a green up candle. First one we've seen a real candle so far, just the first day of the week, okay? That's all it is, but it is up so far as it was back on the 9th of November. What happened? Well, the market slid sideways and then dropped off again. So does that mean everything has changed? No, it doesn't. What do we see with the price percent oscillator? That's the most important thing. It's our main indicator. And of course, we've got great trainings at the website. I'll put them at the end of this training for those of you watching the YouTube video. What we see happening is the price percent oscillator has gone flat. Derivative oscillators losing downward momentum. So we'll just continue to keep our eye on things. But remember, the trend is still down until we have a weekly vertical crossover. That's when the blue line crosses over the red on the price percent oscillator. That hasn't happened yet. So the market is still down in the long term. So we go from the weekly to the 2-day. What do we see there? Well, we see something fairly dramatic happening. We're getting close to a 2-day vertical crossover going up. Now again, we had that happen back in late November, went up for 6 days and then rotated back over going down. We saw on Thursday we had a red spinning top man indecision tending down, but what we saw happen as far as Friday and Monday go is that we have an up candle. Now it's a traditional up candle. It's a real one. It's a green solid box with a wick on top, no wick on the bottom. We see that the price percent oscillator is heading up, hasn't crossed over yet, so we don't call a crossover. Means we're still in a confirmed down move. If we have a crossover going down on the 4-hour chart, we would jump in on an inverse trade in something like SH. That is the inverse fund for the S&P 500. It's one of several, but we would do that in a practice trade to practice an inverse trade with the market going down. Is it going to do that? I can't tell you, man. I don't have a crystal ball, but I do know how to read charts, and the trend is your friend until the end, and it hasn't ended yet. So we'll continue to watch and see what we can see, but this latest candle has drawn, and until there's a crossover on the 2-day chart, we still have the possibility in a down trade, and we don't. Once the 2-day crosses over, it takes that out of our hands until it moves back going down, or there's enough of an up move to bring the weekly over going up. So we'll continue to watch and see what we see. We'll let the charts lead us, my friends. We don't push the charts. We let them tell us what's going on. Now, what do we see on the 4-hour chart? 2 days of up movement after a day of down movement. So we see down movement on Thursday and then up movement on Friday and Monday. Up in the morning, up in the afternoon, derivative oscillator gaining upward momentum, price percent oscillator heading up. See just how high it goes. And again, things start crashing on Tuesday and or Wednesday or just slide sideways. Might give us an opportunity to jump in on a down move, might not. But be ready and primed to go. So we go from the 4-hour chart back to the weekly chart, and we're moving on to the Qs. That's the NASDAQ 100. What do we see going on there? Well, again, we see that the down move is not being sustained. That pretty much appeared to end back on the week ending the 28th of December. And then, of course, over the prior week, a green doji pretty much means indecision tending up. So far this week, an up candle. Again, price movement is so far below the weekly trend line. Derivative oscillator losing downward momentum. That price percent oscillator is heading up, but it's a long way from crossing over going up. So we still have a downtrend, of course. We go to the 2-day chart. What do we see there? Ooh, that is really, really close to a crossover. You could call it one at this point. Now, if there's decided down moves over the next day or two, it will pull back away from that red line, but it is awfully darn close to a crossover. We'll probably confirm that depending on how things go over the next day or so. Don't want to pull out of the possibility of a down move, but that is crossing over right now. Again, it's a very weak crossover. That doesn't mean that we have any kind of up trade at this point because the weekly is still in a down move. We'll watch derivative oscillators flipped over. So If down moves resume tomorrow, that'll pull back away, but we'll just continue to watch. What do we see on the 4-hour chart? 2 days of up movement, up in the morning and the afternoon. Derivative oscillator heading up, price percent oscillator heading up. So we'll continue to watch the cues. Again, if there's a big down move over the next day or two, might give us an opportunity to jump in heading down, but doesn't look like it's going to be going that way. What's happening on bonds? Of course, bonds. Oh my gosh. We had a weekly vertical crossover all the way back on the week ending the 30th of November. And since then, 1, 2, 3, 4, 5, going into the 6th week of up movement. Now, bonds were down for the day, but that doesn't mean the Heikin Ashi candlestick is. Remember, it's measured different than your typical candlestick. I'll also attach that on the end of today's training. You can also find the Heikin Ashi training at chartingwealth.com, along with the training on the price percent oscillator and all of our other trainings. You can also find it at our YouTube channel, and please subscribe at both those places. If you subscribe at chartingwealth.com, of course, what do you get every day? You get the daily market review, and then once a week, the weekly review. And we have all that special training for you. And you also get links to our, all the different market worksheets we have, the weekly market worksheet, daily worksheet, and the trade worksheet, and then how to save money subscribing to the type of trading software that we use, freestockcharts.com, or the paid service TC2000. We give you $25 off there. Also links on how to buy our book and become a Patreon supporter. So we so far have started the week off on the Heikin Ashi candlesticks with an up candle. We see the derivative oscillators lost a little bit of momentum. Price percent oscillator, again, still heading up strongly, but has lost a wee bit of momentum with that 0.29% down move. We see on the 2-day chart, things not just flattening out on the price percent oscillator, but heading down a little bit. So far, we have a red open box candle. Now, that is not a strong red down candle. That is a cautionary candle in our Heikin Ashi candlesticks, but it does mean weakening. And of course, what's really telling us that is the derivative oscillator, well, the price percent oscillator heading down, derivative oscillators also losing momentum. We go from the 2-day to the 4-hour, and that's where you see things cross over going down in the morning. Of course, as we have been talking about, as we've seen those prior down candles that we saw on Friday, putting in some warning bells there for the prior up moves that we had. So again, doesn't make sense to be in any kind of up move with that crossover going down if you were. So again, we'll continue to wait, watch, and see. Remember, when we look at the weekly chart on TLT, it is still confirmed up. We look at the 2-day chart, still confirmed up. So if things turn back around before that 2-day chart crosses over going down, it'll give you the potential for an up move in 20-year bonds. But again, with stocks surging over the day, what does that tell you? Well, typically bonds are a safe haven when stocks aren't doing well. So if we see stocks turn back over, you can expect bonds to turn back over. That would be stocks turning over going down, bonds heading up. So we'll continue to watch and see what we see. We go from the weekly chart to gold on the weekly, and what do we see going on there? Gold going into the 6th week of up movement. Or remember, gold crossed over going up back on the 5th of October, the week ending then. Went up for a few weeks sideways, and then we started our past up move quite nicely back on the 7th of December. Gold up 0.35%, derivative oscillator gaining upward momentum. Price percent oscillator heading up. We go to the 2-day chart, and we see things weakening a little bit on the price percent oscillator. We see a red spinning top. Open box doesn't mean a strong down move, but it does mean cautionary, tending down. And we see the derivative oscillator losing upward momentum. And like I said, the price percent oscillator moving upward losing upward momentum. And again, we are looking at this candle having been fully formed. A new one will start tomorrow on that 2-day chart. What do we see on the 4-hour? Of course, the 4 hours crossed over going down really with that big downward momentum back on the morning of Friday the 4th. And what we saw in the afternoon, a little bit of strengthening in the afternoon, and then that was on Friday, and then up in the morning on Monday, and sliding sideways and down in the afternoon. So again, until we get a crossover going up on gold, if we do on that 4-hour chart, we would have pulled our position and just waiting to see what we see again. Nothing strong down movements, but Those of you who are hanging in there with gold, hoping it'll go up again, I would just caution you to just be careful, because we do have the derivative oscillator gaining downward momentum and that price percent oscillator still heading down. So again, we still have confirmed up moves on the 2-day and the weekly. We just want to see that 4-hour chart rotate back over, going up. Folks, that's where we are as we end the day on Monday. And again, just keep providing all this information to you. Appreciate all the book orders lately. The Patreon supporters, you want to find out more about how to buy our book, Charting Your Way to Wealth, and or become a Patreon sponsor. You can do so looking in the show notes. We always have a lot of great information we share with our Patreon supporters and the book buyers. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.